record. Okay, welcome to the beginner trading session. 6/29, going into July. Now, I know everybody on this call, or most people on this call, probably don't have a great understanding of the 6-month candle closure, but this is a significant time that you can line up directional trades or long range trades, uh, directional bias in the markets, and in
So,
particular
w-
uh, for pairs, not necessarily indices, but I mean you can do some of that with indices, but I'm speaking in particular with trading currency pairs. I'm going to share my screen and look at a chart, and we're not going to worry about uh, trading it, but I want to look at the structure because this is the piece that we kind of been trying to drill in with for you guys. Okay, this is a daily chart, but it's a long range chart, right? You can see information that goes as far back as May 2022, right? We don't really need that much information, but it doesn't hurt to see the overall structure of this chart. So if you're just looking at this chart, you can see that the market pushed up and now it's going sideways, right? Um, what does this mean for you as a trader, right? If you get good with market structure, you could have traded this to the top, then you could have traded it down, you could have traded it back up, then you could have traded it down again, okay? And I know maybe at this juncture in your trading experience or your charting, it might not make much sense, or you might not be able to tell. But there are telltale signs that happen in these charts that give us an indication that price is going to do one thing or another. And many times we get it wrong as traders, right? And that failure, we don't want to admit it to ourselves, or we don't want to admit it to somebody else. Uh, that man, I just don't understand. I can't see it, right? So you suffer in silence, and you lose until you're out of money and you disappear from the Discord. Um, so if you pay attention and you submit yourself to understanding structure, those losses will stop at some point. And then it will be win. And your account grows, you have a better understanding. You're still going to lose some trades. It happens. But you'll have a better overall understanding of the things that are going on. In this subset, or this snapshot, um, I don't know if y'all can tell, but this market pushed up, right? And at some point we broke higher. And then at some point we came back down, right?
can you broke higher of what, from where? Broke higher.
Okay.
Just
Well,
I just like to
I feel you.
break it
So,
down. Break it down, buddy. Break it
what I
down.
wanted to do, let me see. Here's my path. Okay. So, uh, first of all, let me just go to the weekly because it'll make it easier to digest. Okay. If I'm on this weekly chart, I'm just going to use the path tool to draw out structure because it's easier. So if we're using this as our baseline level of structure, right? Maybe we're saying we came from here and we went to this high. Then the market pulled back. Then we broke this high, right? And we went either this high or this high. But just for all intents and purposes, we're going to use this high, this low. I'm going to mark this high temporarily, this low, and this high. Do I have anybody that disagrees with what I just marked? And if you disagree, it's not a big deal. This is the way I see it. Now, there are a couple of problematic points with what I just drew out, right? So what I really need to find out is if this high is equal with this high, or if this high is higher than this high. It's significant. And the reason why that this is significant is because the market came from down here and it pushed up to here. If these are equal highs, then this low right here is not a swing low. Does that make sense? I need y'all to communicate.
Can you please
Could you?
repeat that? Thank you.
Yeah, I was gonna say one more time.
Is an equal high, so that's why it's not a swing low.
So listen to what I'm saying, guys. If the market came from here, right, and we all agree that this was a low and it pushed up, this made a new high, right? This push up, we broke structure, so we have a swing high and a swing low, right? When this pulled back, if it did not create a new high, then this is not a swing low. That is significant.
So swing lows only exists when it's a new high is created.
You create a new high, right?
Got it. Okay.
So there is a point to where this market structure matters. And some people would say, this is a push up, this is a pullback, and we just count this push, right? This would just be a complex pullback, and they would make this a swing low anyway because this is a swing high. That's fine too. It's argumentative, but if you're looking at the market like this, you have to trade according to that structure. And here's what I mean. If this is your swing low and this push up is your high, if this is your low and this push up is your high, then we don't change character until we break this low. And then you're looking for the market to retrace back up to this level, your 78.88, to take a sell trade. Do y'all understand what I'm saying? Y'all are kind of quiet, so I'm going to assume you don't understand.
Just one more time what you said.
Okay. Because the market moves based on swing structure, right? You take your trades based on the swing structure.
Which is breaks of structure.
Breaks of structure. When this market pushed up past this high, we know we're in a bullish market. So when we pull back, we're expecting the market to go higher.
And if I can just add, you're expecting price to break this high, right? You're expecting price to break this high.
To go higher, yeah.
So he's saying if this did not break this high, then that's not part of. So wait a minute, let me make this a little thicker. So if price broke this high, that's the swing low. Then it pulled back and broke this high. Now this is your swing low.
Exactly.
Which means this would be the shift in structure or the change of character
that you look for sell trade.
For the sell trade. However, if price did not break this high and did not break until here, then this is your swing low. This would be your shift in structure, and then you can sell. Did I make that any more?
So which one is the breaker structure? Because I understand the swing low.
So that's what I'm asking you. Do you understand where the breaker structure is?
Yes.
And this is why I have to ask these questions because when we draw a structure by ourselves, right? If I'm just giving a class in market structure, this is what I'm showing you. It's easy peasy. But unfortunately, when you have to go to the
It never
real
looks that
and look,
easy.
it
It's
doesn't look
never
like
that
this.
easy.
You see what I'm saying? So instead of me giving you this softball, I'm showing you the real deal. And I'm asking you, can you see where the break of structure is? And it's not I'm not trying to do this to pick at y'all or but I'm asking a real question because many people can't do this. And this is a real life example of why people fail when it comes to trading. All right. Because these highs are significant. They mean something, right? This pullback to this level and push up to break these highs, it means something. In my opinion, this is the swing low, right? For me, this high is lower than this high. And I'm going to show you the way I do this. Whenever it's close and I don't know, I can throw on my line chart. My line chart gives me the highs and lows. It's kind of a cheat sheet for me. Now, Kim doesn't necessarily look at it like this, right? What I would say to you is you have to choose where you stand on your structure line, and you have to stand there every time
And
because
I also want to say not just choose, but you want to back test to
okay,
see which works for you.
right, but
So
but my
yes.
point is your where you stand and your consistency at standing there is going to determine how successful you are. Kim can't switch back and forth. I can't switch back and forth. If I look at structure like this, I have to look at structure like this every time. You understand? So whenever I lose a trade because I took a trade based on this structure, that's cool. Whenever I win a trade, that's cool. As long as I'm looking at structure like this, I'm going to win more than I'm going to lose because my strategy doesn't change. It's the same and it's based on the same information. Does that make sense? Trading is about how disciplined you are, how consistent you are. It's not about who has the best strategy. They are all great strategies. They all work. They all work. Support and resistance works. Uh, Supply and demand works. Smart money concepts work. They only work if the trader is disciplined. It's kind of like relationships, guys. All relationships work if you're consistent and if you're disciplined. If you're cheating, you're probably going to get fired. They're probably going to leave you. So it's all the same. So if you look at what I mapped out, right? If you look at this structure that I mapped out, for me, here's a low here. The market goes up. Here's a high. We have to adjust this low down. So my swing structure would be to the downside. Here's a low here. And we pushed up, we broke that high. Now, when this market comes down, I want you to pay attention at the bottom. We have a break of structure right there. You see how that low goes just below?
So just to clarify that Todd switched to the line chart, and Todd uses the line chart to identify his breaks of structure. Just to explain the difference. Todd uses the line chart to look for his breaks of structure from the open and close of the candles. I use my wicks. I use the candles because I use the high and the low of the candle as to identify my breaks of structure or change of character. Let us know if you don't understand that, if that didn't make any sense.
I get what you're saying in terms of how you identify your breaker structure. I
So
guess with Todd's, I just don't see it right now. Like I'm trying to
so,
see exactly where that was.
so
Yeah.
Todd is using the line chart.
Okay.
You say you don't see the breaker structure.
I'm looking. I'm trying to look right at it
Well,
because it seems like it's like
I'm
consult. I don't know if I'm blind, but
Todd,
I
Todd, you gotta zoom out. You gotta zoom out.
want to look right at it.
Todd,
Yeah.
you gotta zoom out. Some like make it big. Zoom in.
zoom in. Okay, so on the line,
Make it bigger so we can see it.
y'all see it now?
Yeah, right there. So
So
you see how his open and close of the candle right there, close the body closed
Yeah, below that line.
below that line.
Okay, that makes sense. So that
now,
even that little bit of like closure below the line is considered a breaking structure.
well, yeah, but this is
Okay,
this is why it's
that makes
important, guys.
sense.
So if
And
you
I'm
look if you look at this and you don't see this break, you're not anticipating the pullback, and you're not reselling this back down. If there's a break of structure here, right? If I fib this move down, now look at this pullback. There's the 78, there's the 88. It's right between the 78 88. Gives you a double tap, and boom, we're off to the races. It
and I
it's
was just trying to clarify that because I'm teaching it one way, and so put in your notes that Todd uses the lines and he identifies the breaks of structure from the open and close of the candle. Now, if he put the candles back,
the wicks.
with the wicks, I look for breaks of structure from the high and the low of those candles. So if you know the anatomy of the candle, you have the body, which has the open and close, and then the wicks, which are the highs and the lows. So that's where Todd and I differ.
And
And
it's
gonna
nothing
be
wrong with differing, guys.
yeah.
The 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 main thing with the difference is however you see it, you have to trade based upon what you see, right? Let me give you a, I'm sorry, who somebody had a hand up.
Yeah, that's me. It's Gloria.
Hey, Gloria.
Hey, I just have a question because you were mentioning earlier before
Uh-huh.
there were two swing highs and they could be equal highs. But does when you see an equal high, does it also indicate something?
Well, yeah, to me it indicates a level of liquidity. But let's talk about those highs for a minute. Um,
Okay.
we were talking, it was these highs right here, right?
Yeah.
These were the highs that we were talking about that could have been equal. They were kind of hard to tell, to differentiate between when we
Mhm.
looked at the with the candles. Let's put the candles back on and let's discuss.
Can you remove that?
I'm gonna delete my fib. So this high and
Wait a
this
minute. Can you zoom in? Can you zoom in?
this
Okay.
high and this high. Now, clarify, Kim. I don't want to put are these equal highs for you, or is this a break of structure?
Um, it wouldn't be a break of structure for me.
For me
Okay.
neither.
Okay. So
It would,
for
yeah.
you guys, those are basically equal highs, and it's not a break of structure. For me, this is a pullback, and this is a break of structure, right? So this would be a swing low. In this case, it doesn't really matter because we pulled back and we broke these highs. So maybe this ends up being you guys' swing low when this was my swing low. Does that make sense? Am I explaining that correctly, Kim?
Yep.
So whenever you get these
One
breaks,
question. And why is it a break of structure? Because you don't see the wick, what is standing out there for
you
the
said, why is
previous.
it a break of structure?
Yeah.
Because when I use the line chart is going to say that this broke the high. You see how this is the high on this first hump. This is a clear break. We're above that
It's
high
it's the open and close.
of the candle, not the wicks, not the
Candle.
high and low. It's
So
the
not
open and close.
the high, yeah.
So this line chart says that this is a new high. And in my case, this would be a swing low. Then the market pulls back and breaks my high and goes here. So this is my new swing low.
It's clear. Thank you.
Okay. The reason why that's significant for me is because as a trader, when this price came down and broke my swing low, it told me that we were selling UJ. UJ was now, it finished its bullish push and now it turned bearish for me. For you as a trader, you're still bullish until it breaks this low. Does that make sense?
Yeah.
Yes, it does. Thank you.
So Todd, for example, when you right now when you see that little like those two lines kind of like I don't know if that's support and resistance we made, I don't know. But
This
the
right
point I
here?
was trying yeah, those two red lines. What I'm trying to say is that if the I guess the structure of the graph itself we have here stays within those two lines and they don't really break kind of would that kind of be like a consolidation going on, or is it more like
Yeah,
we just wait until it breaks officially when either or line?
well, it's definitely consolidation, but more importantly,
That's what I see when I look at this.
more importantly, more importantly than consolidation, you have a clear swing high
Hmm.
and you have a clear swing low.
We ain't,
Yeah, right.
we
Yeah,
ain't,
right there.
we ain't learned the fib yet. We ain't learned the fib yet.
Well, I get it, but I'm just
No,
I'm
I
just
know, I know.
showing you. So when we start taking trades and you have price in between your swing high and swing low, when price is at the bottom right here, this is called discount. So as a trader, I'm looking for buys in the discounted zone. This is why market structure is important because you're supposed to buy low and sell high.
Hmm.
So this 50% mark tells us which level, which zone we're in. If price is consolidating, that's cool. Once it gets down here, we're looking to buy it back up. Once it gets up here, we're looking to sell it down. Now, I just explained to you that for me, once we broke this low, we're in a bearish market. We're looking for sales. Okay? A bearish market for a trader means I need to wait for price to push up here, or I can buy price back up here, and I should expect it to sell.
But
Okay.
it has to break his structure first, meaning it would need to break that structure right there that he's hovering over to then pull back to the 78 or 88 or premium area to then sell some more.
Right. So for me, this was my swing low. We broke structure. We pulled back and we sold down. Right. This double bottom, we didn't break that low. We double bottom. We're coming back up. We're going to come back up to the premium level, probably to fill imbalances, but I'm expecting a sale after that. Right. There's tons of different ways we can get information.
So
right?
Can I just
can I
ask?
say something?
Yeah, y'all can say.
Hold on. Because I just want to explain to them, even on the weekly, because I had to mark up structure on the daily, mark it on the weekly. So this is the current weekly structure. So we don't want to assume that price is buying all the way up here yet, right? One, because price did not break this structure yet. So if price this, even though this has a double bottom, this could be buying up into this last weekly structure to
Mhm.
then sell and then push back up.
Okay.
So
I don't disagree with that, but I disagree with it a little bit. And here's why. On this weekly chart, you're correct, but I don't want to pigeonhole um, the group into looking at structure just on a 1 week or structure on whatever. Okay, um, we have to utilize all. At this point, it doesn't matter. We're gonna go. We're gonna roll with what Kim said. I don't want to confuse y'all. We're gonna roll with what Kim said because this is the weekly swing right here. So we'll see what price does at this level. There's a reasonable expectation that price might pull back higher than that, but we're not there yet. So as a group, we have to go step by step. We would just entertain this weekly swing, okay? That's that's the easiest way to do it, I think, Kev.
yeah.
Okay, are y'all tracking?
Mm-hmm.
Because this is the weekly swing structure. I mean, and hopefully everybody, y'all kind of understand this. This was a push up and a push down, and then you got another push up and a push down. Y'all, I mean, I think we all understand that, right?
Oh, go ahead. Yeah.
So,
Everybody tracking?
so Todd, I have a quick question then,
Uh-huh.
just to clarify about what we said earlier.
Mhm.
So, since you mentioned you are looking for a sell in this
Mhm.
trade, kind of,
Mhm.
when in the sense you're just waiting for it to bounce up back up to resistance and then catch the pips down. Is that exactly what you're saying?
Well,
Like up to the top and then
I
back
don't
down.
really use support and resistance, but yeah.
Okay.
So there every
It's just easy to see it that way, I guess, when I say support resistance,
Well,
because
yeah,
it kind
but
of looks like
I
that.
think that when we're on the subject of structure, if y'all can see this up move and this push down, right? Yeah, because everybody can understand that this is a bearish structure, right?
Mm.
For me, I see this push up and push down as a bearish order block on a higher time frame. 1, 2, 3, 4, 4 green candles and several red candles. If I go to a higher time frame, I'm going to see one green candle and one red candle that's longer than that green candle. Then I'm going to see one green candle and one red candle bigger than that one. Does that make sense?
Yeah, that makes sense. Higher time frame would do that.
Yeah. So I like to use all my time frames. Whatever candles close, I go and look. So the market moves the same way, which is why there's a reasonable expectation that we can expect price to push up. If you notice, when we got this bearish structure, we came down, the market pushed back up to this imbalance. You see that? The market pushed back up. And if we fibbed from this high to this low, this is probably about a 65 or 75% pullback. Then we would have expected for the market to either break this low or bounce from that low. It didn't break the low. So a reasonable trader can expect that we're going higher. We got to re-challenge this high. What Kim is trying to say is I put the cart before the horse sometimes. I'm saying this is likely to break this high. She's saying wait to see it happen. She's saying don't anticipate. She's saying wait for it to happen and react to it when it happens. Does that make sense?
Mm-hmm. Mm-hmm.
And she's not wrong in saying that because there is safety when you have confirmation. We all have a thought process of what's going to happen, right? So I can look at this candle. There's a bullish order block. There's a little red candle. There's a green engulfing candle. What needs to happen is the market needs to pull down into that order block to buy higher. I'm anticipating that it's going higher. What Kim is saying is, no, let's wait for it to go higher. You see what I'm saying?
Based off of structure,
Based
just
off of structure.
that it's buying, but my thought process
You
is
can only buy it to here.
up to that structure.
Yeah. Yeah. So, and I don't want to, even though I don't see it the same way as Kim, I don't want to teach new people to look at it the way I look at it. I think you have to get a little bit more experience. What she's telling you is proper. Does that make sense?
Yeah, I guess what she's telling me is more like, I guess, really good risk management practice when you
Well,
think about
yeah,
it.
it's just to be cautious and wait for confirmation. Wait to see this high break. I can tell you and say, hey man, this high is going to break. Maybe price goes up against it and it doesn't break. And what she's saying is that we're in the bearish structure. So when it gets here, it could bounce and sell and break this low.
To create another level of structure.
Exactly. Does that make sense?
Yeah, no, that makes sense. I guess just since we are sort of new to it, it's best to be on the side of caution.
Well,
That is,
I
I
agree.
agree. I 100% agree. Only because when I used to whenever I didn't have like a proper confirmation I anticipated, I always got burned. So it's a new way to look at it. So I appreciate it.
Definitely. But back to the original reason why I wanted, why I even chose this pair is the details matter, right? When you're looking at this information, the details matter. So if this level is not a break of structure for you, when this price came down, if this is not a break, then you're not looking for a pullback and a sell down, right? Or maybe you're looking for a pullback to buy higher, at which point your your price would have stopped here and you're not ready to sell this down. But the details matter because you're setting your trades based on what you're seeing in structure, right? Let's just look at this little leg from this pullback to this push up to this breakdown, right? If we're just looking at this little leg of structure,
And I just sorry, Ty, sorry,
okay,
I want to drill it. I got to
okay,
drill it.
go ahead.
So so y'all know this was a break of structure, right? Because this was the last structure. And then there was a change of character or market structure shift. What in the heck is that?
What?
I don't know why this is
Yeah, that's what I was going to point out, Kim.
oh, okay. Okay, go ahead then. I'm going.
That's why I went to look at this little subset, right? Because you wouldn't have saw like the details matter is what I was saying. And if this wasn't a break for you, you would have expected this to buy up, right? It would have pulled back, it would have broke structure. This would have been your swing low. So once this pulled back and broke your swing low, now this triggers your bearish mindset, right? The only problem with this is maybe you're expecting a full pullback to this imbalance and you never got it. The market just kept melting. Does that make sense?
No, I get that. But see, that's the thing. How would you anticipate, I guess, not anticipate, but like get an idea of where we're going in that situation? See how it
Well,
went
so
down? Normal people would
I
assume it
do,
just went
but
back up,
what
right?
y'all
So
have to understand is
yeah.
Can
every
you
trade, I'm sorry, go ahead, Kim.
zoom so we can see the candles or that
This subset, this
mm-hmm.
pullback.
Hold on, let me erase this. Erase this stuff. I don't know how and or why. Okay. So what I think I hear is that alto.
Yeah.
Yeah, that's me. That's me.
So based on what Todd is saying, this was the break of structure and this was the shift of character, right?
Mhm.
And what I think I hear you saying is how do we know it wasn't going all the way back, right?
Yeah, like back up, for example, because it's Friday, March 25th already, and we don't know what the next few months will look like. And you just want to make a trade and got to get in something. Like, how would you know you would, it's like, I
No,
guess,
you don't just got to get in something.
The
not
same
bad. No,
way.
you know what I mean, but
So wait a minute,
it's, I guess.
the same way that I just said that this was structure here and that price may come up here and start selling again, right?
Mm-hmm.
Is the same thing on the internal. So price broke structure. This was the last internal structural move. Price did not break that high.
Mm-hmm.
So if price was to have broken that high, it would have broke the internal structure. You would have been looking for the pullback to then continue buying to probably this little imbalance or supply zone right here.
Yeah, and I get that.
And when we say internal structure, that's a lower time. Like if you go to a lower time frame, that you can see the structure more clearly.
You can see it clearly, but it's usually just the structure within this leg. So within that leg, you have structure, right?
Is the structure of the structure.
Yeah, the structure of the structure.
Good
So
on
yeah,
Bebe.
uh-huh.
Good on. I said Bebe didn't think he
That
could
was
get it.
that was her.
Yeah.
So yes, the structure of the structure. So once you get your shift in structure, you then have to start identifying the internal structure, your last internal structure move. So you're waiting for price to break this structure to then start buying. Until then, you sell until you can't sell no more. This is the last bearish structure. So you're looking for price to come back up here somewhere to then start selling to the downside. So if now I say I'm a cautious trader, but once I see the structure, I'm just gonna set the limit and see what happens. That's just me. I'm
Mm-hmm.
set it and see what happens.
And here's down here as this structure is pushing down. Once you get this, to me, it was a change of character because we broke this high. Then you pull back. You could be in this for the buy. You can buy to this high, right? Safely to this high. And you can look for it to go in between these two highs, if not, if it doesn't break it. Just based off of what I see with the market structure. Because you broke, if you're looking at internal structure, you got to push down, a pullback, a push down, and then this is just a complex push up to break this high. Is that a break for you, Kim? Yeah, you're above everything. So yeah, that's a break of substructure. So you broke that internal structure and you pulled back. That internal structure break should have been a change of character. Then the market pulls back and now we're pushing up, right? We rejected right here, but we're still making higher lows. So I know for sure, based on structure, that I can trade that market to this point on a buy if I got in right here.
Mm-hmm.
How many pips is that?
590.
That's a paycheck. Just from recognizing structure. If you look at this pullback, it probably pulled back to the 78 from that break. I know y'all ain't using the fib yet, but I heard you talk about 78, 88, Kim. So that's about a 60. It didn't quite pull back. Maybe about a 70% pullback. That's a good pullback for a trade to that zone. If you're a person that sets the limit at the 78, you would have missed this trade. But it's all good. Every trade that happens, we don't have to be a part of. I think that's what kills a lot of new traders too, over trading. Every trade that pulls back doesn't necessarily have your name on it. and you won't necessarily get an entry. So please come into it understanding that many trades are going to happen without you, and that's fine, perfectly fine. If you become an expert at your trading style, right? I'm only getting in at the 78. You're going to have a few trades, but they're going to be very profitable, right? And depending on what time frame that you choose to enter on, like if you enter on a 78% pullback on the daily time frame, your wins are going to be ridiculously large, right? You're trading, your setups are on such a high time frame. If it's on a weekly time frame, your wins will be even more larger, right? The lower the time frame, um, you'll have more frequent trades, but the wins won't be as large, right? Because the real estate that their trade covers will be a little less than the real estate it covers on a higher time frame. That make sense? Yay, nay? Y'all quiet. What?
It makes sense.
Yes, it does make sense. But I have a question, Todd. Can you maybe regroup just in a small summary what you explained? So you start with the
Okay.
markets that you identified, and then you break.
That's a good question. Let's recap. All right. Because I think um the point that I was making is when you're looking at structure, right? You have to identify your swing highs and swing lows. You have to identify your structure breaks. And it's not always going to be clear. So you have options on the tools you use to help you decide what a structure break is. But you need to use that same skill set and those same tools every time to identify your structure breaks. Because once you lay your level of structure, if price goes past that, then that is a structure break for you. And you can identify your swing high and swing low. Then you'll expect a pullback if you break structure, uh, you know, and you'll be anticipating that this market has shifted from a bullish market to a bearish market. So I can take a sell, at my 78 or 88, which is right where this trade pulled back to take this sell down. That's very important because there are going to be several opportunities that come your way throughout your trading career that are going to be determined by structure breaks like we're seeing here, right? It's maybe not apparently clear. Now, as a caveat, if this wasn't a structure break for you, you still would have been able to identify that the market structure shifted right here, where this market clearly came down and broke this swing structure. So even though you wouldn't have caught a trade from here, you could have caught a trade when the market pulled back from here, right? Nobody in our group caught this 1,500 pip trade, even though I saw it. I didn't catch this trade. I didn't sell this 1,500 pips. So you shouldn't feel bad if you miss a trade, right? We're all going to miss trades. My point in having this conversation about structure is I don't want y'all to come in here thinking that structure is going to be clearly identified, right? Or not hotly debated, right? We can debate anything when it comes to trading. Your trading style needs to be something that you own, something that you're comfortable with, right? I heard one of you ladies say that you see structure like Kim. This is not a structure break for you. I applaud you, right? If that's the way you see structure, then don't let me convince you to look at it my way, right? My way is the way it works for me. The way that you see structure, maybe like Kim sees structure, and that works for you. And everybody here, we got 15 people in the call, maybe a few more who will watch this video later. You have to identify what makes sense to you. And I think the way that Kim has been teaching it is where you need a full body candle closure below this wick right here for it to be a structure break. Is that correct, Kim?
That's correct.
Okay, so a full body closure, candle closure below this line would be the structure break on this swing, right? Not these wicks. It needs to be full body. So there's nothing wrong with that. Nothing wrong with looking at it like that. You just have to look at it like that every time. And for me, my line chart said this was a structure break. So I would just look at it different. It doesn't make me right and Kim wrong or vice versa. What it makes is us take trades at different spots. That's it. That's the only thing that changes. We're going to
Yep.
take trades at a different place. There's
Yep.
nothing wrong with that. As you can see, if I had took my trade here, I would have won. Kim would have took her trade here, she would have won. A win is a win. You just have to not get caught up on what somebody else is doing and understand what it is that you are doing. So that's really what I wanted to bring out of this conversation, right? I wanted to show you a picture that's not crystal clear. And I wanted to ask you guys individually what your opinions on this picture is, right? Y'all really didn't communicate. Y'all kind of gave me that silent treatment. But I wanted to kind of get a little argument going. Maybe not an argument, but I wanted people to be able to look at it and say, well, I see a break or I don't see a break.
Yeah, he wants to hear the argument. Okay,
Those
he
those these are the real discussions.
he gets excited when you.
I do. I like to argue my point, but y'all have to understand. Like trading is something that there are buyers and sellers on every side of every trade, right? When you buy, somebody is selling, and you're winning, and somebody is losing. Well, and a lot of the times when you first start trading, you're going to be the loser to my winner. Like somebody who knows what they're doing is going to be winning. And there's a reason for that because the picture is not clear. It's not going to be that bull crap that we draw on the chart. It's not. If structure was that easy, nobody would lose. But structure is not. It's not this right here that we're drawing. This is not what you're seeing in most market conditions. So we have to be able to understand and differentiate between our highs and lows. And you need a consistent way of doing that. Yes, Marcia. You got your hand up? Somebody have a question?
Marcia. Maybe she.
So, yeah, y'all, that's part of the course because y'all been mute today. And maybe it's because I'm here. Whenever I listen back to Kim's recording, y'all are very talkative. That's funny. But I wanted to kind of pick a pair that's not handed to me because I see that some of y'all are better at structure than other, in my opinion. Um, I see that some of y'all understand structure a little bit better. So I wanted to kind of throw uh, something in here that's not cut and dry, right? That's not that you can see it either way. Because at the end of the day, I wanted to demonstrate that it doesn't matter if you see it my way or Kim's way. If you trade it the way you see it, you're going to win. That's the biggest takeaway. I saw this as bearish structure when it broke the low. And I saw a trade from here. Kim did not see it the same way. She saw it as bearish structure when it broke here. There's a win in both of those logics. You don't have to lose because you don't see it the same way. And that's the biggest point to me about this trade setup. And it's not just this trade setup, it's every trade setup as a trader you're going to see. If as long as you see it the way that you see it and you trade it the way you see it, there's a win in that trade for you. Doesn't matter if you don't see it the way Todd sees it. Our entries will be different. Our results will be the same. Okay, who has questions? Misha,
Or oh, go ahead.
Misha, can you do me a favor?
Oh,
Or
my
it said
sis,
her mic ain't working.
mhm.
Oh,
Are you on a
yes.
laptop, Misha?
I can hop on it real quick. Hold on.
I
Yeah,
was about
please. Misha, me and Misha were supposed to do a one-on-one.
no, the day that you're supposed to be prepared to hop on the chart. So
Yeah, I want to see Misha's chart.
mm.
But I went to Bebe's dad's house and I ain't had good signal. Um, really since we've been back. I know y'all are a little confused, and you know confusion can be good, but I want y'all to understand that even though Kim sees it a little different and might talk it a little different than I do, it's the information it will be the same. The result will be the same, right?
Marcia, log on with your phone or dial in with your phone on your phone.
So we can have two Marcias and two Kims.
Yes, right. What's better?
Niga.
What's better than two Kims? Two.
Two Marcias. Niga, you there?
Yeah, I'm here. Can you hear me?
Yes.
I just wanted to ask, like everything that we've just done,
Uh-huh.
if we're like, does it still apply to like a lower time frame?
Yes.
We'll still go through the same
Mhm.
Of course.
strategy. Okay.
It's Fracta. It's Fracta.
I'll be having too much fun, man.
Hey,
Oh,
that's my London accent. It's Fracta.
I was there in May. I had too much fun doing that. I get it.
Hey,
the worst. It's the
you probably had
worst.
to wear a
Uh,
down jacket in May. Still, it was cold. Was it cold over there?
no, it was not bad, man. I was not bad at
It
all.
was 2 weeks of summer.
I wore like a hoodie. That's it. I'm Canadian, so I can handle it.
But yeah, you cold too.
Oh,
Sade,
colder than everybody else. That's for sure.
Sade, are you in
Yeah.
are you in Niga? Y'all are both in London, huh?
Yeah, I'm in London.
Niger, are you from London?
Yeah,
You
well, I
can't hear
live
her
in Kent,
accent.
but
Yes,
basically in
London.
London, yeah.
She's got the accent, yeah.
Yeah, y'all both have. I'm surprised you didn't pick up on it, Sade.
Well, when she started speaking, I thought, yeah.
Sade, you sound like computer love now. Your connection is not great.
Sorry.
It's all good. But Sade, are you how are you doing on structure?
I feel like I'm getting to grips. I still sounding like computer love.
Sade, did you post the chart? Let me go look and see. Hold on.
I did. Just the lower low and higher low one.
Let me see. Let me see.
Misha, you haven't got on your computer yet? Come on, y'all. Come on, y'all.
Wait a
Don't
minute,
be
Sade,
shy.
are you shy? Are you
Yeah, I
shy?
want you to share. Misha.
Yes.
Could
Oh,
you-
okay. Okay.
Sade, you're shy?
Kim, can you look at mine as well?
Yeah.
Because I don't know what I did wrong. I want to see what I did wrong.
Okay.
Appreciate it.
But we want to okay, share
Oh,
your
later on, not right now. I'm in a
but
rush.
well, we got time for y'all to share your screen today. I got time today.
The only thing you did, Sade, was the break of structure. I didn't understand why you put it there, but
Oh.
and it should have been so your change of character, because price was bullish, right?
Hmm.
It should have been at the last higher low that you marked. So once price broke the last higher low that you have marked up, that would be the shift in structure.
The
But
high low. Oh, okay.
yeah.
Okay.
And then where was Alto? Is Daniel on here? Daniel. Teddy P. Is Teddy P on here?
Teddy Pendergrass. Come
Yeah.
on. Quit playing, Teddy P.
Big shout out to Teddy P. You already know.
Let's see. Niga's was pretty good. There was a few exceptions. Alto, where's yours? Hold on.
Misha, go to a higher time frame, please. Like go to the daily at least. Let me see. Let me see what you're working with. I don't see any. I haven't seen any swing highs or swing lows marked on this chart. Which one did you have that had the swing highs and swing lows?
This is the chart she marked up.
Well, it must
you
not be
erase it?
FXCM. Is it FXCM or is it
Because we did the 4 hour.
But listen, is it
But your mark, but
Kim,
this should
can you
be.
look at our chart and see if it's FXCM on this chart? I don't think it is.
Let me check.
FXC.
Let me check. It was CMC Markets.
Okay, so click right there and go looking for CMC right there. It's the first one, feature.
Mm-hmm.
Yeah, y'all, and in the future, if you use Oanda, we'll all have the same looking charts. But okay, let's look at this.
Okay, there it is. Now pull it all out so we can make it bigger. So we can see all your swings and okay. Then push it.
Okay, so what do we have going on here?
Push it over to the right a little bit. Push your screen over to the right. Okay.
Like this?
Yeah. Okay. Ty, you want to ask the questions or you?
Well, I have a basic question, Nisha. If
Okay.
this is your swing high, how do you have a swing high below your swing high?
Mm-hmm.
You see what I'm saying?
Okay.
I don't.
So
If we're
my
coming,
idea here was this was a swing high, and this part, this area here, where
well,
my
yeah.
is at,
So
that
your
was a swing
so your
high.
swing structure, well, I'm assuming that it is this right here.
That right there said, yeah, and
So
then
so if
right there.
if this is your swing high and this is your swing low, everything in the middle is not swing high or swing low. The swing low would be lower than this, or the swing high would be higher than this. Right? Or am
Okay.
I making sense?
Yeah.
So if you have a swing structure, right? If this is your swing structure, that means the market went from a low to a high and we got a lower low. I don't know if you're saying that this is your swing structure because is that even a swing low vibe? For me, it might be because it's wicks down here. I had to put on the line chart. But I would think that this low to this high and this is a pullback. That's how I would look at it. I would look at from this swing low down here, the market pushed up and it pulled back. So I don't mind this being the swing low and this being the swing high. But this pullback can't be a swing low until we break that high.
Mm-hmm.
You see what I'm saying? But I
Yeah,
don't know how
I get it.
you guys are looking at it. So that's why you
Wait a minute. Hold on, Ty. Slow down.
I see some things here. I understand a bit more clearly. And what you're saying is, yes, this could be up here, swing high, going all the way down, but I started right there. But up here, swing high, down here, swing low, up here,
pullback.
swing high.
That shouldn't be a pullback. If this is your swing high, which I agree.
So wait a minute, hold on. If the way you just said it, if you're saying that this is your swing, right?
Exactly.
Okay. Yeah.
And this pulled back, what would need to happen to make that a swing, an actual swing high? At this point, it's just a high.
It's just the high. So
It
it
says
would
it breaks
have
your low.
to
It would
Okay.
have
go
to break the
below
swing low.
this here
It would have to break that
in
swing
order to
low
have another
in
swing.
order for it to be a swing high.
So in after saying that,
Mhm.
none of this is even a thing right here. None of this matters.
Exactly.
None of that.
I agree. There's nothing.
Yep.
It's price
It's
in
in
between
between.
your swing high and swing
It's
low.
it's a range. Yep.
Yeah,
It's in
price is
between the range.
consolidating.
Consolidating. Yes.
Which is also, I was going to say, which is also known as some people might call it consolidation.
Yes.
Okay.
Right. Now,
Okay.
Nisha,
So I
sorry.
want so delete all your swing highs and breaks of structure in here. And even delete this one and this one
This one.
and this one.
And this one.
And that last swing high at the top is now a lower high. Is that correct? I think.
Well, this is the swing high.
Would you? Yeah,
This
that
is
one at the
swing high.
top. Yeah, that one at the top is a swing high.
Yep.
That other one that looks like that's a lower high, right? Like a new
So-
or like a
so-
higher low. So I don't know. No, not a lower high.
So this is the same one Todd was just working, right?
Exactly.
So
Yeah,
this is
exactly.
on the weekly, this is the leg right here, right? When he went down into a smaller time frame, which was the daily, there is the internal structure in there, right?
Exactly. And this is the break of that internal. This is the change of character.
So this is
The internal
he's saying this is the and you see I'm using the high and he's using the body. He's saying that is the internal structure, internal change of character. But overall, this is the weekly swing. So once price gets back up to this weekly, somewhere in this weekly, right? It is going to show you whether it's going to keep pushing up
or sell.
Or break structure or change character and sell back down to this swing low.
Mm-hmm.
So it's going to show. So once price gets there, that's when you have to start identifying the internal structure at that time. If price does not break that swing high and gives you a shift of structure on the internal structure, then price is going to start shifting to continue to sell.
Mm-hmm. Okay, so if it's not breaking, I guess the swing low, it's gonna or like if it's not breaking that structure we set up already, it's gonna continue to sell.
This up here.
Okay. So where would you identify where the sell would be, I guess, when you say continue to sell? Would that be if it went below the swing low, or would it be more like you're waiting for that retracement, then catching the pips down?
So once price comes into your zone here, right?
Okay, so when the price touches the swing high, you're catching it down. Okay.
So you're going to have, it's going to look like that.
Yeah,
right?
I get that.
So either price is going to, wait a minute. Did they erase? How did that happen?
My bad. I erased.
Oh, okay.
Control Z.
I thought it was acting weird again. So once price gets here, price is, and say this is your structure. Price is either going to pull back to here and keep buying, or price is going to shift structure. And then you look for if you trade like Ty, you look for an imbalance. If you trade like me, you're looking for the supply zone. And then you start selling from there back down to this low.
Got it. Okay. So what would be this when you say either like the supply zone, like you said, or
I
what
just
Todd
marked it
said?
up.
Okay. So in a sense, for example, when you say supply zone, if it goes up a little bit past the supply zone, but it doesn't go all the way up on the buy,
so
you
once
just
it
catch it down.
once it shifts character,
Mm-hmm.
let me go back. Let me do that. Hold on. Here we go. Okay. So if price pushes back and then pushes back up here and then pushes back and then breaks this high, right? And then shift character, then we're looking for a sell to a probably this zone here, to then continue buying. Okay. If price doesn't break that high, and say it comes back up into this zone, and then it breaks or shifts structure, right? You're looking for the same way that when you waited for price to get into this zone here, you're going to get a shift of structure, and it might even break this low. It might even come down here and go into a demand zone before pulling back. But you're looking for an imbalance or supply zone. For me, that's either going to be an order block or the last up candle before this down move, right? You'll be looking for price to come up in here. And I don't even look, once this happens, if it doesn't break this high over here and this shift happen, I just set my limit, right? And you can either cover this high, or if you want to, this over here is the protected high. This over here is the protected high. So you can put your stop loss up above that high, wherever that is, after all my drawings, and then wait for price, sell price down to this swing low.
Now,
Mhm.
So that's what you have to look for, that whether price is going to break the high. Once price gets in this zone, that's when you have to start watching price.
Yeah, I get that. I was just trying to clarify if it did break and retrace back down, for example, like say it broke that supply zone and like pretty high like you did earlier, and then it went back down all the way to these like where the graph is now, for example, at 145. Where would you have seen whether or not it was gonna go that not go that far, but like because when you say it
You mean
breaks
go
this
back
up.
up here?
Yeah, when I'm saying not really that,
So
but like example, see if you draw that purple, like that pink line past the supply zone and then back down. When it goes past the supply zone, most people would assume it's gonna continue up, right? How would you know that
It's
it's
going to
gonna
have a
go
change
back?
of character, Alto.
so once you
Okay.
yeah,
You're
you
talking
got to
about
have a change of character to
Change your
this.
character. Yeah, okay, that's
because
what I meant.
the market is going to actually go up like this. And if it comes back and breaks an
Yeah,
internal structure, there's your change of character. So
okay.
I get it. You're kind of talking in what ifs, kind of fairy tale-ish. But we can go and look at several examples on charts where price has made moves. You're always going to have a level of structure that price has to come back and break, that you'll
Mm-hmm.
know, okay, we changed the directions. The same way that this price came down, it set this high, right? And then it came and broke that high.
Okay.
Once price broke this high right here, there is your signal that we're buying. Price pulled back. For the people who saw that signal, they got in. And right now they're winning their trade. They got in here, price is here. All they're doing is waiting for price to get up to that zone. Does that make sense?
Okay.
And even for right here, you have a break of structure. You have this is all internal. It's not a this is still your swing high. This is still your swing low. But for
It's
me,
internal, yeah, in that zone.
to identify, and this is consolidation. All this right here. Oh,
Yeah, all in between there is consolidation, yeah. I
okay.
guess in between the swing high and swing low.
For me to determine, because we did say we were buying based on the weekly. There was a weekly order block, right? So this was the weekly order block right here. So I'm saying, okay, so I have a weekly order block. Price may pull back to 78, 88, whatever it's going to pull back to, right? And although we're in a bearish move, I would want to see price break above here to pull back and then continue buying. But the reality is price can come here, it might come back here, it might even come back in this zone somewhere in this zone, create structure, and then start buying. So this could pull back, like right now it's probably at the 78. It could pull back to the 88. It could even pull back to the 100 point. I mean the 100 mark. But once you see that shift, that's when you know you're in alignment to continue to buy up to this high. Not a swing high, but the high. It's a high.
Mm-hmm.
Okay.
You're in alignment to get high.
Oh, it is Sunday and you're supposed to be in church right now.
Hey, I'm not talking about high on marijuana.
Just off life. There we go.
High
We'll
off
use
this
that.
trade, man.
That too. Okay, I think I'm starting to get the hang of it now. I guess just a lot of practice, I guess, and review, but I'm starting to get the hang of it slowly. Like at least I understand swing high and swing low a lot better. That's for sure.
So
Okay,
let me kind of tie, or hopefully I'll tie this together.
Mm-hmm.
By understanding where your swings are, where your structure is, right? By understanding this concept, right, of a swing low and a swing high, and understanding your internal structure. If you saw structure this way, where we came up and we broke that internal swing, that internal high, and it pulled back, you would have been prompted to take a trade from this level back into your institutional candle right here, right? Your supply zone, if you will, right? You would have been under the impression that, hey, there is a possible trade that's setting up for me to take a trade from this level all the way up to that institutional candle. That's how you would have saw it based on this structure, right? This bullish order block is just confirmation that this was the right decision to get into this trade. And this trade is going to pay whoever took it right here. Does that make sense? Because we
Where was the order
understood
block,
our
sorry?
higher time frame swing structure,
the check mark that he just made is a daily order block.
Oh, those multiple green candles with the hammer that in the red.
I think this is a weekly. It's a weekly order block.
So when a weekly order block, whenever you have a breaker structure, price pushed down and then pushed up and broke structure, is usually an order block on a different time frame.
Right. So if you go to the weekly, you'll see an order block. So who's this? Misha's chart. Misha, can you go to the weekly chart? Just put 1W. Just type 1W in the.
Right.
Like down here, type one. There you go. 1W. Okay. So there's your bullish order block right there.
So here's the bullish
red candle.
Here's the bullish order block right here.
I see that. Yeah, that quick green.
So all that means is because you understood your higher time frame swing structure, you understood that when we broke that high and pulled back, you could take a trade going up, right? And I think the high was over here when we're looking at it on the weekly. When we broke that high and pulled back, you understood you can take a trade up here to your supply zone.
So looking on the weekly chart, you can make the assumption that it looks like it's going to go back up.
Well, yeah, that's what I was
looking
saying.
at it now. That's what, based on the analysis.
Kim is right where you have to wait for your confirmation. So based on this weekly, I can see a scenario where we push down and we go up to this level.
And the confirmation would be when it reaches that level, right?
Well, yeah, but you have confirmation on the lower time frame because we're breaking highs, right? If you notice, price
that makes sense.
Breaking highs on lower time frames. So
so that's where you get your confirmations is through lower time frames, of course.
Yeah, as long as next week it's a reasonable expectation that we're going to get a bullish candle.
I would assume too, just by looking at it.
All right, y'all have questions.
Okay, this is what I'm gonna do because y'all know I recorded them videos and they did not. I ain't had no sound, as y'all can see. I'm here. I'm on here twice. Okay. Um, what I'm gonna do, Todd, is this week on Monday. I'm gonna set up a schedule on Monday, Wednesday, Thursday, and maybe Friday. And I'll just pick a person, whoever's available on the day, and we can go over your chart. Have you do the same thing Misha just did, and we can have a discussion on how you marked up your chart.
And
We're,
you know what I think? I think I need to
we're,
let you do that. And because I've not been here the last two meetings, I probably need to stay out of the structured conversation because I don't want to confuse their understanding. It's the same thing, but I think that two different voices might confuse new people. Do people feel confused between what
no,
me?
I feel no, and I don't think I think I think we're on the same page, because I do explain to them, how I know that I've mentioned that you look for the break of the open and close of the body.
Right, but like Marcia, she said yes, agree, Todd. Like I think that uh they have to get a basic
They have to
understanding.
take notes. That's what they gotta do. They gotta take notes. And then once they go back and back test and study, they'll see the difference between the two.
What's your question, Shade?
So in one of the videos, it was a video on, I think it was the 7-minute video on structure that Kim put up early on in the beginning
Mhm,
session chat,
mhm.
and the man was saying that um, if we are in a swing uptrend and we are taking a substructure sell, we should look to take profit at or before the demand zone at the bottom of the swing structure move.
Uh-huh.
So I wasn't really sure what that meant. I just wanted to know if you could show show
I
me
can
what.
I can show
So,
you, but
oh, go ahead,
or you want
Todd.
to do it, Kim?
No, you can show. It doesn't
Okay.
matter.
So okay. Let me share my screen, Misha, because I don't want to mess your chart up. Boom, 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 boom. Let go. Okay.
Now, what was the question again? What did he say?
Uh,
He said you're
he
in
said if
an
we're in a
upswing.
swing,
Mm-hmm.
This market is pushing
if
up. It's a clear up moving market. You did
Mm-hmm.
that substructure sell. You want to take your profit
At that
at the demand zone, right?
substructure swing.
So here's your substructure swing.
Mm-hmm.
We pushed up, we broke structure here.
Mm-hmm.
Now you get in the sell. You see how it come down, we break this structure, we pull back up, you get into the sell right here.
Hmm.
You can take this sell down to the demand zone. Now, the question is, are you going to recognize the demand zone? I'm not going to teach supply and demand, but if you would recognize your demand zone as this kind of down here, you would have kind of been SOL.
Go to the 4 hour.
Oh, Kim gonna teach that demand zone. She gonna poison your minds with demand zone.
Sure is. Okay, now make it so I can see the candles. So, okay.
I like this one, but just that top wick is just huge.
Yeah. So you could take your profit. Now, what I look for at a demand zone, I look for, wait a minute, why are you squeezing in? Why are you
Oh, I
squeezing?
thought you was
I
done.
can't
Okay.
I can't see. So what I look for is um the order block. Hold on. Hold-de-do. So I look
This is
for
a better order block.
that is a better order block because I like that it has wicks on the top and the bottom. So as you can see right here, there's no wick on that top, right? But if you wanted to take your profit there, you can take your profit there, okay? But what I like to see above that order block is the imbalance. That's the demand zone, a supply and or demand zone for me. An order block that has an imbalance above or below it.
I agree wholesale, Kim.
Imbalance. Okay, so an
Now,
order
now
block
you
that
talking
has
ICT.
imbalance.
Now you talking ICT, Kim.
Whatever. I don't know ICT. I don't
Order
listen.
block,
I don't listen
an
to that
imbalance,
man.
and a break of structure.
I
Hey,
don't know
preach
that
it, girl.
man.
Preach it. Cause we broke
I
that high
I
right
don't
there.
I
Preach it,
don't know.
girl. You
I
see
don't know
that
that
over
man. I don't know that man, okay? I do not know that man.
there?
So yeah, so that's what I would be, that's where that would be a demand zone. Now, as I've said plenty of times, I want it to be around my 78 or 88. So it would definitely have to be somewhere in that zone, the 78 or 88 zone, for me to take my
That'd have actually been
profit to.
perfect. That was actually perfect, Kim. And yeah, that was a perfect demand zone. And in my brief time with supply and demand,
Mm-hmm.
what I would say is if you use the daily uh zones, you're probably gonna have a better experience with supply and demand. So if I was using the daily to do my supply and demand zone, this daily candle right here with that wick would be where I would have chose.
And that I like that. No, but however, because this has already been mitigated, I'm going to be looking
Higher.
just a little bit higher.
Well, you can do that. There's nothing wrong with that. But
But
they ask,
but it could come back there. And my and if you leave it right there, this is a perfect example. Once price got here, right? You see how price came in, pushed back, and then broke structure. So once price and it pushed back, but it didn't break any structure. This was a break of structure. So once it pushed back, it pulled back into that zone, right? Retested that area
that imbalance.
or imbalance, whatever you float your boat. it broke it broke the structure, pulled back to it, retested it, and broke structure again. So now you have another level in here for either price to go to and then push back down to that zone, or break above, pull back, and then keep buying. It's always going to be two options, maybe three, but I don't know what the third one is. But it's always going to be two options. Price is either going to break the swing and then you get in on the pullback to continue buying or selling, or price is going to go into your zone, give you a shift in structure to then continue selling. One of the two. That's why I've been drilling the structure, because you want to know where price can pull back to either buy or sell if you're trading based on structure.
Does that answer your question, Sade?
Yeah, I think it does. Yeah.
That sounded like Ron Isley over there.
Oh, don't do that. Don't do that.
I'm gonna cut a whole album. I'm going to the studio
Please
tomorrow.
don't.
I thought that was Ron for a second. Isley Brothers? I was like, okay, throwback.
Is that Alto saying that?
That is me, yes.
Alto, don't do that. Don't
All
do
right, all
because
right.
Don't
look,
be a hater. Don't be a hater, girl. Don't be a hater.
because by the end of this beginner session, he gonna show you his YouTube where he was a pop star. Okay.
Oh, hey, yeah, I forgot all about that, Kel. I've been trading for so long, I forgot I was famous
He
before.
forgot he was famous. Them ones.
Hey,
Don't
man,
don't do that, Alto.
I got 1 million views, man. I'm famous.
Oh my gosh.
Here we go.
Here we
I
go.
forgot about that fame. You know what I'm saying? God has really blessed me,
Mm.
baby.
Oh Lord.
You know you was with a famous dude.
Oh my gosh.
Woo! Oh man. So y'all what do y'all think? Are y'all confused? Is it more clear?
Is it getting clear?
Is it getting
I think
more?
it's getting clear for me.
It's
So
definitely getting clearer. It's just some more review, I guess. As well, I definitely understand it clearer for sure.
I think I would need to see if I can start seeing if I can start identifying these things by myself.
I got a secret for y'all. I mean, and this is the God's honest truth. If y'all really want to understand market structure, y'all have to put in at least 4 additional hours per week. Like you have to be watching these videos. I can't stress that enough. Um, if you're waiting for this call or you're doing your little markup and you're submitting it and you're waiting for this call, it's just going to take an extra long time. Market structure is probably the most difficult thing to grasp when it comes to trading. Discipline is rough, but it's not hard to grasp. Everybody kind of understands where they're undisciplined at. But reading the market, understanding what a breaker structure is, being consistent with that is very, very difficult for most traders. So, I think I heard Kim say it on a video. She can't count the number of hours she spent watching YouTube videos. And I know darn sure that I can't count the number of hours I spent watching YouTube videos. And if you go to my YouTube page, which is not paid for, I'm not funded by any social media platform, I probably have how many hours you think we put on YouTube, Kim?
I can't even tell you.
It would probably be embarrassing.
Yeah.
The
Yeah.
number of hours that me and Kim have spent on YouTube on the same Zoom calls, sometimes 2 hours and 3 hours on a Saturday. So the ugly truth about this is it takes crazy amounts of time for you to gain an understanding. Bebe, you sitting here. She's not an English speaker, or English is a primary language. But how long have you been attending these Zoom calls? No, in English. She said a year and a half.
I was gonna say it's been actually I saw a video of yours when you were on a call with her and it was translating.
Using the translator, yeah.
That was almost 2 years ago, right?
Yeah, the funny thing is we were talking. We don't even use we haven't used the translator since I've been here. You know that's how good her English is.
But even in those days, I didn't understand plenty of things that maybe I can understand right now. I'm still being a beginner. Sometimes I lose a lot of information, but it's like take the time, watch the videos, and repeat again if you need it, because even for me, sometimes I don't understand.
Yeah, I get it. So what she's saying is like she's watched countless hours of videos. She's on ICT video number 7. But she watches countless videos. She watches Spanish YouTubers. So you have to kind of use your time to advance what you need. You know what you're weak at. If you don't understand market structure, you have to pop in videos. Somebody out there has made a video that explains it better than me and Kim. You just
And I want to say that even with that, even I feel that as beginners, you all are getting catapulted to
Hello.
hey Marcia, you all
Oh,
are getting catapulted to a level, because I know when I started, market structure is not what was taught.
me either.
It was not what was taught. Todd and I traded from one line of support and resistance, and I'll be teaching it. Support and resistance, right? It was pretty much a zone to zone. That's what it was.
Yep.
And so I'm thankful to be able to teach the market structure. I'm thankful to have learned it, because it definitely made me a better trader.
It cleans up everything.
Mm-hmm.
Cleans up everything. And it is just a matter of how you see it, you know. Yes, Marcia.
I was going to say earlier, when you draw out market structure like on your own, just drawing it out, it's so clear. But then when I look on the chart and see the candles, it's not clear to me. I'm not for sure why it's so foggy to me. I'm getting it slowly, but it just seems like it's so much easy and exciting just drawing it. Like I can actually draw it out in a pencil, like you were drawing on the
Of
chart.
course. Yeah.
But then when you look at the candles and you actually look at a chart, you're like, hold up, this not that easy. So
Exactly.
that's where I'm at. Like, it's not that easy. I mean, I'm not saying it's hard, but if I can get that out of my head, like drawing, it's not the real deal. It's not.
So the important thing is, and both Todd and I will go through this, is definitely doing a top-down analysis.
Oof. I was just going
Like
to use a
you
different topic. Yeah.
Yeah, you have to go to, you can see, you don't have all the noise on a lower time frame. And I don't want to say smaller time frame, I want to say lower time frame. Because if you go from the weekly, as we saw on the weekly, this was the move, right?
Mhm.
But once we went down to the daily, this little thing was added into the loop.
Mm.
So, and then you got this little thing added to the loop, and then this added to the loop. So when you go down to a lower time frame, it starts to bring in all the noise. It helps. It does help. Like if price is not breaking highs or lows, but then starts breaking internal structure on the lower time frames, then it helps with you getting into an trade sooner than later. But we're gonna get you there. We'll get you there.
And it's going to start with you consuming videos. Guys, that might be a nasty word to y'all, but you got to consume the videos, man.
And
I found.
when you consume those videos, so for me, like I still watch videos to this day, right?
Me too.
But when I see somebody that doesn't see the structure the way I see it,
Click.
I can consume it, but I'm like,
Well, I
like,
wouldn't waste my time with it. Like somebody is going to resonate with you.
yeah, no, yeah. But I still look at it just to see. So when I didn't know market structure, I consumed all the videos. And then, like Todd said, once I found one that resonated with me, then I also tweaked it to what I understood about the market. Because one thing about the market, and if you're on these charts enough, and I'm not saying all day, don't do it all day, okay? That'll give you a headache. if you're on the charts enough, you're going to see the same thing repeat over and over and over and over and over again.
Mhm.
You'll see it. So that is
Now,
why, yes.
so what I'm realizing is that I have to use these lines to show me where the swing highs, swing lows. I had a whole bunch of lines because on my chart it was like a lot of busyness going on. So basically, you're saying external is what we're really looking at, and in between that, the internal is more like for. Is that for more
It's
like
for
int-
internal is to buy or sell back up to the external.
Okay. Okay. Right. Okay.
Until the external is broken.
Okay. Okay.
Then you have a shift in structure. So you have a shift in structure either way, right?
Mm-hmm.
But I forgot who asked the question, who said, the video that was played, it says once you see the shift in structure, you can only take your profit at the next level of structure. So if this was the higher time frame structure, and then you see these shifts in structure, right? You should take your profit to the next level of structure. And then once price gets there, you wait to see what the market is going to give you. If price breaks this high, then for me, my thought process shifts to buys. And when I say shift to buys, I mean whatever is all the way up here, that's where I'm shifting my buys to. Whatever those highs are all the way up there.
Okay.
Because I can't see it because Ty got it, but this was a break of structure. So that means most of that is probably the move. Okay, yeah. So this was the break of structure, right? So this is all part of that move, this move to then, so you can take profit here, let the market show you what it wants to do. Like again, it might come down to here, because here is on the weekly, that wasn't it. So once you get price here, price gonna do one or two things: either break or shift in structure to keep selling back down to this low or this zone that Todd has marked up. If price does not break that low that Todd has marked up over here and start shifting structure, then your goal is you can take price at this high, but the goal is to take price at this high.
Okay.
Swing high. So what she was saying is at these levels of structure, you can take profit. If you want to take partials, you can. I'm not a partial girl. I'm taking all my money, okay? Because I know I'm building my equity on my account. And I know if price breaks this, then I can get in on the pullback to then take price up to this high. If price does not break that, then I know I can sell down to there. So I know I can get back in another trade. It's always a bus coming. Okay. There's always a bus coming to pick you up. You just got to know which bus to ride.
And some of y'all riding that short bus.
Oh my gosh. OMG.
Oh
Y'all.
my God. Hey,
Y'all.
Christina, you wanted Kim to look at your chart. You mind sharing your chart? Miss
What'd you say?
Miss Reed, will you share your chart, please?
Oh,
I'm nervous.
ah,
You
she said
nervous?
I'm
Come
nervous.
on, man.
I'm
Listen,
nervous.
man. Listen. Forex classes. Have you looked at
Christina, do you want me to tell him who
Tell
your
them
mom
what?
who your mama is?
Oh,
who's your mom, Christina? Rita?
Adrian.
Huh?
Adrian.
Adrian! Hey, don't tell your mama on you, Christina. Share your chart. Listen, do y'all know how much Forex classes cost? For somebody to teach you support and resistance from y'all's favorite influencers? Like $5,000? Man, this is free. Please share your chart. How old are you, Christina?